Storyboard, how to measure market share. The Nielsen Company, Hindustan Unilever, Godrej, ITC and P&G weigh in on the debate. And as 25% says, it needs to get back to its roots, advertising. For brands, market share is one of the most sought-after measures of success. Every point is hard won and fought over, and in the consumer goods sector often worth hundreds of crores of rupees. So when brand owners, including the country's largest consumer goods company, Hindustan Unilever, say there's a problem with the data they're getting, it creates a storm. The Nielsen Company, whose data is in question, reacted this week. It says it has already reprojected data April onwards based on the latest, that's 2009 census, and is open to increasing the retail panel sample size. Sana Vishwanath and Shweta Shriram report on what Nielsen is saying and also get us company reactions.
There are divergent trends in some categories. The trends indicated by AC Nielsen and the trend indicated by IMRB, the household panel, there have been variations.
This is what brought it all out in the open. The fact that despite increasing sales, Hindustan Unilever had lost market share across categories such as soaps, skincare, detergent cakes and hair care between March 2008 and March 2009. During this period, its market share had fallen by 2.1% in detergents and even more sharply by 5.9% in soaps. But the company claims that the Nielsen retail audit data did not match its internal sales figures or IMRB household research. The Nielsen Company has just revealed that while from April this year it has started using the 2009 census of 7.5 million stores as the universe, it had till then been extrapolating against a larger universe of 8.5 million stores based on a 2006 census. And while the over-reporting of stores could have impacted those HUL numbers, the research company still defends its audit as the most reliable method of working out market shares.
A retail audit would always be more accurate than a consumer panel in terms of giving you market share estimates. Because just look at the situation. If you have a consumer panel of, let's say, whatever, maybe 40, 50,000 people, all right? And if you have a retail store audit of, say, 20,000 stores, 20,000 stores, if you multiply, let's say, by 1,000 consumers per store, is equal to almost 20 million consumers. There was 2 million consumers. So, question is, the vastness of the data that you get from a store audit is many-fold more than what you get in a consumer panel. So there's no question in my mind that a retail audit will always be more accurate than a consumer panel.
The reason that I say that there's a divergent trend is that if you look at two of our categories, for instance, let's take a category like skincare, which is a very big category for us, or hair care, which is another very big category for us. Both these categories show divergent trends. So while one of the panels, which is the consumer panel, is showing a upward movement in market share, the retail panel is actually showing a downward movement in market share. And that is something we can't reconcile when we put our internal sales data also and try and look at, because the pickup factors between what Nielsen then shows and the internal shipments that we have keep varying over periods of time. So I think that's really what we mean by divergent trend. Ultimately, it's one version of truth that matters. If you have several versions of truth, then there's an issue.
While the Nielsen Company has not increased its sample size of 16,700 stores, it has recalibrated all market share data since April this year. Interestingly, the data for April and May shows that HUL continues to lose market share. In the toilet soaps category, market share fell by as much as 5.7% over the same period last year. In skincare as well, there was a 6% drop.
Yes, it's a fact that we have lost share in skin cleansing, and it's a category we're determined to win back share, and we are doing all that we need to win back share. Having said that, I think the point is not about absolute and so on. The point is about over a period of time, what you really need to see is you need to see the degree of variation between your internal sales and market share or the reported sales by Nielsen. The degree of error needs to be consistent if you are to look at a meaningful trend. If the errors start moving awry in a given quarter or in a period of time, then the trend itself becomes a little suspect.
The recalibrated data has left some of Nielsen's other clients unhappy as well. Dabur, for example, has lost between 1% and 4% market share in hair oil, tooth powder and digestives over April-May 2009. The company has said that Nielsen's data is grossly inaccurate. Godrej Consumer Products too claims that in categories like personal wash, where according to Nielsen it is a 10.1% share, it actually has at least 1.5% more. In June, Godrej suggested that Nielsen's data should be looked at only to get a sense of market trends and not for the absolute numbers.
The reason why I think all of us are concerned with the new data that's come out is because of the fact that I think there has been a change in the way Nielsen looks at the universe of outlets and hence extrapolates from the sample that they have. I think as a result of that, two things have happened. One, the fact that market growth have actually come down. So if you look at last quarter compared with say March quarter, there's clearly been a drop in terms of market growth. So that's one. Now is that because of the way the market size is being calculated? I think is a moot point. The second thing that's happened is that certainly for some specific brands, especially regional brands, I think the pickup factors have come down.
With so much discontent about its numbers, the Nielsen Company has been in intense meetings with clients. Next month, it plans to put forward the details of a proposal to increase the sample size to 22,000. This will include the canteen stores and all types of modern retail formats. Nielsen says the increased sample size will reduce the levels of fluctuations across states and monthly variations will also reduce. But industry watchers say that it is unlikely that Nielsen's data will ever match internal sales figures.
Where the shortcoming happens or where there is a discrepancy between, let's say, company sales and Nielsen data is because Nielsen may not cover certain channels through which company goods move. So, for example, the canteen stores department, which is not covered by Nielsen, which is very important for personal care categories. In the case of beverages, Nielsen may not cover what is known as HoReCa, which is the hotels and restaurants through which a whole lot of soft drinks will move.
One is, of course, the increase in sample size, which would obviously make the state-level data more accurate. But we are also looking at more coverage of the uncovered channels that I spoke to you about. And specifically on the modern format, we are looking at increasing the exposure to modern format.
To revise the audit panel, it will take a year and the data will become more expensive. Companies say that is not a problem as long as data available is more reliable.
In a country like India, one empathizes with the fact that when there are 7-8 million outlets and they range from, let's say, large format modern retail down to a pan bidi corner shop, it is difficult to do a great sampling job and then to extrapolate it, right? But the fact is that if a retail panel has been operating for a period of time, the reliability needs to go up.
We spend a lot of money already in pulling together this sort of data, and if you look at data that is suspect, then that money is not worth spending, and therefore if it means putting in a little bit more good money for better data, then it's fine. But the critical thing is, are we getting better data, and therefore we will look at what it needs to be to actually assess the cost versus the benefit.
Details of that proposal to increase the sample size will be ready in August, and the sector will have to buy into that idea, including the cost implications collectively. Here are more reactions. I met Kurush Grant of ITC and Shantanu Khosla of P&G at the FICCI conference on the FMCG sector, and here's what they had to say about the issue.
Well, since ITC was one of the largest spenders in marketing research in the country, and we started trade research in India, we're obviously in the forefront of such a debate. Our issue is very simple. We would like data which is practical, data which is affordable, and data which is accurate to within accepted norms. So the question we've got to ask ourselves, along with people like Nielsen, is what kind of standard errors are acceptable? So on certain categories, for example, we should say, okay, we will not report at a town level, we will not report at a state level, we will report only at a national level. Because at a national level is the only space where you're getting reasonably accurate data. And at a state level or at a district or a town level, you're not getting data. So there are certain other categories, heavily penetrated categories, for example, huge, large categories, where you can afford to report at a market level because the data there is accurate. So it's really a question of buyers of data, users of the data, sitting with the suppliers of data, and AC Nielsen is just one of the suppliers, and agreeing to what is the most acceptable cost versus accuracy norm.
There are some people in the industry who believe that Nielsen data, even if it is not what the company, what matches company estimates of market share, when it comes to trends, it's important if the trends are right for us to say that that data is all right. Would you agree with that?
We would look for both. Right, we would expect an accuracy not just in trends, but we would also expect an accuracy in the absolute numbers. We are continuously working with Nielsen, frankly, both in India and outside India, to ensure that we collaborate together to get the best and most robust data.
Nielsen now says they have a proposal. Nielsen also says that financial analysts are looking at data closely and may need to understand how this data is generated better. And that their lack of understanding that financial analysts have could be pressurizing companies. Where do you have a comment to make as FICCI's, the head of FICCI's FMCG committee?
I don't think the industry should really bring financial analysts and their needs into this picture. For me, that's a completely separate area. I think it's important for the industry to have a common basis of reliable, accurate data, which in general everyone agrees is reliable and accurate. By and large, Nielsen is a vendor of choice and has the best capability in this area. That being said, individual companies like mine are partners with Nielsen, and we are having continuous dialogue to improve, better understand as a regular part like we do with any other partner we work with. I don't think personally that the analyst aspect is really related to this at all, because it is much more for us to better understand how we can better serve consumers. It's not a scoreboard.
Cautious reactions, but everybody keeping close tabs on developments. Data and the insights from this research are very critical to the business, with companies spending crores of rupees on it. We've got Short Spot next, a new spot for Coca-Cola from London. Let's take a look.
Tracy Organ was especially built in New Zealand, where London's linked Duke of Wilson shot this new summer spot for Coca-Cola through Mother. The music is being released on Calvin Harris's new album in August.
And ahead on the show, why Percept, that has its fingers in so many pies, says it wants to focus on advertising. We're back in a bit.